What's good, YouTube? How's everybody doing this weekend? Hopefully, y'all had a great week. There was a lot of great setups that pretty much exploded all throughout last week. And given the fact that it was quarterly OPEX, it's actually fair to say that we kind of killed it. I know a lot of people as well from other groups did really well. Again, a lot of swings have been fairly easier to trade as things are moving within 10 to 15% increments on a day-to-day basis on the underlying. So last week, I mean, September has just been great overall, and I hope you've been able to experience some of that. So moving forward for this week, again, as usual, we like to stick around 15 or so names. And so let's go ahead and get started. So first up on the list is Snow, and this is already a pre-charted name that since its last post-earnings gap, which did create a nice catalyst to bring in a new set of buyers, I've kind of had this path drawn out because the last established range low before we had the strong catalyst, aka our earnings gap, right? Our swing low to swing high, we kind of saw some potential corrective activity to pretty much come back and rebalance our open gap, right? Because we know that with these earnings gaps, a lot of the times there's going to be really good confluence. And then we paired it with a previous breaker, and we also had our golden pocket. And so that's kind of what we were anticipating, price to kind of come back within this gap, paired with the confluence of the discount and a nice inversion slash breaker from a lower time frame perspective. And the way the weekly is developing is also really nice, right? If I show you the weekly, we've defended for about 3 weeks now. So that's also something that's very notable for me. And when I talk about these discounts, right, when price is coming back, so remember, and I talk about this all the time, but the reason I repeat it is because it's important for you to understand how this cycle tends to work. So remember, when you get into that discounted zone, right, it's not always about, oh, something's at discount, oh, I'm just going to take it. No, like there's different ways to approach this, right? You can either look to see if price starts to build properly to where that context gives you hints that, hey, buyers are stepping in, or you get delivery, right? And what do I mean by delivery? How does price displace out of your discount zone? Because if you're coming into the potential higher low, right? When you have the higher low, you get the higher high, right? So if you're coming into that discounted zone of the original uptrend, you need to identify that the auction within this trend is still favoring buyers. Okay, so how do I do that? Look for that aggression out of there. So do we get strong delivery out of discount, right? Apart from getting that context of, oh, we get repeated wicks, prices failing to break, we're seeing some exhaustion from the retracement, which is the sellers within a lower time frame, right? So that's kind of what Snow is trying to do here, right? You got that really nice range sweep. So you took out a nice external into the confluence, which gave you a deeper entry into the discount. And then you get a gap paired with a gap, and now you get aggression. Price is now aggregating a daily displacement paired with a gap that closed near high of day. And now you left relative equal highs up at 232.21, 231.94, right? About a 30-cent margin. So if you don't get the immediate continuation, I would like to now use this candle here as a reference point for buyers. So if we don't get that immediate continuation, I would look to see if you get some kind of delivery that maybe consolidates and then pushes you back out. But for the most part, if this is going to be our established higher low, I would like to see price pretty much take out this like nice chain of liquidity here that kind of creates and resembles a nice form of LRLR. So, right, we have the reference point. If we can get that push, I would like to see 236, 242 relatively easy. So I like Snow. Snow has really good external buildup, and I like the potential that's starting to shape out here from a lower time frame up to a higher time frame perspective. The next one on the list is DocuSign. Doku, I don't really know how you say it. I'm pretty sure it's DocuSign. But when I look at this from a weekly standpoint, this is just a beautiful chart. And now what I like about this so far is that yes, we're getting weekly displacement. Yes, we did get exhaustion, but that exhaustion also came from a weekly sweep back into our previous supply high, right? Price struggled to break this supply range since 2022. And we finally broke out of it into the late months of 2024. And now we've kind of just been building out, I'd say, for what, nearly a year now. And so, because of how price has reacted from that weekly sweep, I would like to say this either plays out in two scenarios. Scenario one is you now find confluence up here and price eventually goes into the high 90s. Or scenario two is we go for one more driver. So what that means is one drive, two drive, three drive, right? There's a potential if this exhaustion plays out and you start to get some aggression back. The only way I would see this becoming a little bit more applicable is if you get a strong daily close under like 75, because then that kind of breaks this down a little bit. And that would be your final delivery, which would also give you that third driver into your full discount that then kind of breaks out. So those are kind of the two things I'm paying attention to here. Um, I think what will confirm the daily break is if you get a bit more of daily momentum through 90. And I think if this can start tackling 89, 90 within the next week or so, I do think it sets it up for that weekly magnitude break that we're seeing here. But for the most part, this looks super, super nice, right? You're coming off of a spring low from a nice 3-year Wyckoff accumulation. And now I think it's going back into a stage of reaccumulation that for the most part, regardless if you go for a through driver or you break out from here, I do think this is setting up for a nice move into the high 90s, maybe low 100s. Next one on the list. This one's a little bit more of a fun chart. It's more so based off of the weekly here. And the reason being is we know Tesla can be super explosive. All I'm pretty much basing this off of is we got a weekly gap paired with a nice volume imbalance, nice weekly displacement, and a weekly hammer close. This almost pretty much held the weekly highs that it made this week. And seeing how buyers pretty much stepped in, I would like to say that this tries to push back into the 450s, right? Because you have now a really strong high time frame reference point here. Aggressive weekly displacement that took out what 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, like about 15 weeks worth of absorption, right? Price didn't really move anywhere. You were pretty much absorbing both buyers and sellers, and now you're getting that breakout. So 15 weeks worth of consolidation for just 1-2 weeks worth of breakout. I think this can still set up for another push into the high 440s, 450s. And if earnings is good, it could even just go for a full magnitude break into all-time highs from here. Because look at how that monthly is aggregating. So a lot of nice time frame continuity on this as well. And if you do get that early dip, I would like something like this, because you do have some nice internals here within the 2-hour that could technically constitute for a small little revision. But regardless, I still think Tesla is setting up for a bigger move based off of how those higher time frames are looking. Next up on the list is HIMS and Hers Health. What I really like about this trade, and it's something that I was explaining to the members as we are already positioned for a swing and I would like to see follow through, but I still like it going into this week, is when you have an established range, right, where prices pretty much, this has not really gone anywhere new since May. So it's been developing in a range for quite some time now. But when you're looking at these ranges and you're looking for those false breaks, right? Those manipulation, fake breakouts, those 2B bottoms, 2B highs, whatever you want to call them, is how are you taking out those range lows or range highs, and how are you delivering against it, right? So in this scenario here, you can see I've already marked it out. We had this established range low at 40.88. Look at how we come right underneath it, 40.78. We sweep it, and then it's immediately followed back with a gap up. So when I zoom into the 4-hour, just to give you a little bit more of a reference, look at the delivery once you take a major external low, gap up. Now we have a nice lower time frame breaker followed by displacement if price were to ever return based off of that. But so far, now you've created an inversion gap from the aggressive 4-hour manipulation that got immediately countered, now putting in a nice inside 4. So for the most part, right, if we went from a range low external, I would like to see this now counter and go for a range high external, right? That looks ugly. Sorry, it's gonna bug me. One sec. I'm just gonna make this pretty. I don't know why I have a tendency to like make things look. It just makes sense to me. Right, so range low to range high is kind of what I'm looking for. We have a nice inversion. We still don't really have technically a established swing high yet, just because of how fast this was countered, right? We didn't get enough development. So where you counter or where you place your discount zone, right? So your optimal trader entry, your point of interest, whatever, it's still a bit arbitrary because we haven't had that retracement that we're looking for. But we do have this reference point, this really nice inversion that countered that manipulation candle and pretty much put you back into previous week highs. So what I'm looking for from this is we got the range low sweep. Can we pretty much take this back to the range high? So I'm looking for somewhere in the 62, 66 range. And if we get lucky, we poke above 70. The next one on the list is Amazon, and this one can be a bit tricky. So I'm pretty much going about it in this way. So you can trade this out either in both scenarios just because you do have some really nice compression going on here, right? It looks really ugly, but you get what I'm saying. So you have some really nice compression here. And when you have this kind of compression, price can truly break out either or. And the reason I have this marked out is because when I anchor my swing high to this internal swing low, which is right around here, look at where you reject. So there's two ways this can work. From a higher time frame perspective, you're getting the higher low here and you break out into 240. From the lower time frame perspective, if we cannot reclaim 235 sooner rather than later, this becomes your lower high, and then you go into an LR sweep down into the low 230s, 224s. So for the most part, this is still a fun trade, and bulls really want to see that 235 reclaim because that pretty much sets us up for 240, 243. So really nice compression chart, can go either or. I would like to say it pushes higher due to the flow that's coming in. So that's kind of my lean, and these would be my extension targets. Meta is also another one that I'm looking at from the 4-hour. It's just pretty much stair stepping. And that's really much all I'm going to really say about this one. Right, from the higher time frame degree, you have your impulse low, impulse high. This is your range. You establish a higher low. So you really want to see this complete up into the 796's 809 range, just based off of the high time frame delivery. And then when you look into it, because remember, price is fractal. So when you look into the lower time frames, look at how you're just chugging along. Right, so kind of what I would like to anticipate if this development holds true to the higher time frame structure. Now you have that internal that's kind of just building out. That's kind of what I would say about this. Next one on the list is MRVL. So when I talk about this setup, I want to put some things to perspective. So for the first one, right, look at AMAT's delivery, and this was on the watch list from 2 weeks ago. And I just want to say from the 166, we are now at 190, and I have not changed any of these drawings that we had from the weekly, and it played out exactly like we said. So I'm just going to go ahead and clean this up real quick. Just because I want to show you what I mean by the daily. So look at the daily development, right? You pretty much have this like nice falling wedge, falling broadening wedge that gives you the expansion out, right? So based off of this kind of price action, LRCX had something similar. And again, this was another one that we had on the watch list 2 weeks ago. We didn't make any changes to the chart and it played out the same way. Look at that kind of similar development, right? Semis have been really hot. So then when we go into something like MRVL, it kind of looks the same, right? That falling broadening wedge type of scenario. And now it looks to be like it wants to do something similar to where it plays catch up and you have relative equal highs into that previous month high, which is also a gap right around that 80 mark. So if this wants to develop the same way, I would anticipate, I mean, you have a nice gap up to support. You also have this reclaimed demand range that was an SR flip up until you displace back through it. Now you just need to clean up this gap. So continuation through 76 gives you that push, I think, into the 80 plus, right? And you do have confluence underneath it to pretty much support price if you do want to go lower. But what I'm going at is if semis have all been a strong and leading sector, similar to how you had quantum names, and we talked about QBTS for this week, how it was a lagger and it was going to play catch up. Well, look at what QBTS did, right? We talked about it being a lagger down here when a lot of other quantum names were doing really, really well. And look at the result. So I know they're not the same sector, but we're talking about price development here. And with it being the end of quarter, they could potentially try and push this up to follow suit within the other ones. Another one on the list is AMGN, and this one's pretty straightforward. I don't want to spend too much time on it, but when I come in, and let me go into the 2 hour just so you have a better visual here. 2 hour sets up a clean LRLR, right? Price is stair stepping. You're compressing it the way I like it, right? So when structure does change, the staircase analogy comes into place. In case you don't know what I'm talking about, if you have something like this versus something like this, that's a bad example. Something like this. You see how one is a lot more tightly compact versus the other one is a bit steep and it gives you a little bit deeper dives. So this is the staircase analogy to when price does change development, it's easier to run up the stairs versus these stairs, right? Because with these, you might have to like put in a lot more effort versus this one, you can literally just run straight through it. So when I talk about LRLR, this is kind of what I like to look for. And then you pair it with the lower time frame because if it's changing its structure, it's going to create a domino effect into the higher ones, right? And then it creates this really nice aggregation on all your other time frames that give you time frame continuity, so on and so forth. So we have the nice LRLR already in shape here. And I am just going to go ahead and label that out. And you have the structural change, right? So you go from swing low to then swing high. So if you don't get any corrective activity, you either get a scenario like this or you just get straight delivery up into it. And I would be targeting 292 into 290 for the short term. Again, this is more of a short term play to pretty much clean up this really nice liquidity here. Next one on the list is SEG, Constellation Energy Corporation. I'm not really sure what this is, but we also have another one with really clean LRLR buildup, right? There's no real displacement. You're pretty much compressing price, and then look at the change in price delivery, right? So if we come in here, and it changes. If I drag this out, oops, lower high, lower low, lower high, lower low, displacement with a gap up. So this is important to me. This context is important. This price development is now changing. And you have all of this clean and fun stuff to pretty much ride through. And what I like about this is when I anchor my standard deviations using this last manipulation candle that pushed up into new swing lows. That was then countered with a gap and displacement to change the lower time frame structure. So now the integrity of the higher time frames are also trying to change. And what I like about that is when you anchor those deviations, look at where your -2 and your -2.5 are. Right where that final gap and the last pivot of this LRLR. Because you have this one, right? You have all of these, this one, so on and so forth. And the last high matches up with the -2 and the -2.5, which is an area that we know price likes to travel to. So I really like this one a lot. I need to look at the option change because I'm not sure if they're liquid or not. But again, I'm looking for two scenarios. Either you get a nice little sweep that then you can utilize for this structure change. So putting in the 0.5 in there, right? So you either get a nice little range sweep that gives you a nice manipulation low that delivers out, or due to the fact that you've already kind of been consolidating within a range, this starts to deliver and you get almost 342, 352 relatively quickly. I really, really like this chart. This is one of my favorite ones. Circle, I'm not going to spend too much time on this one. I feel like a lot of people are talking about this one, but I mainly like it because from inception into the market, you have your solidified range. Price has been slowly gravitating back. You're at a discount. And so really all there is to it, does this higher low here hold? And do we get a pushback into 200? I mean, there's nothing really else to say about that. So hopefully you guys get the gist. This one is just a potential structural continuation, right? When you have your range low to your range high, price has now returned into your discounted zone. This is your main threshold. So if this is all going to hold true, I'm looking to see if this higher low can establish into the continuation of the original trend. So I would target 190 up into 212. Getting into some of my favorite charts, ASTS. I am a huge fan of this chart. We are at weekly OTE with your previous 52-week high supply range. Price struggled to get through it until you didn't, and you did that with displacement. When we're talking about trend continuations, we want to see this kind of aggression. You don't want to just have your structure and then you poke above the high and then immediately tumble, right? That's not trend continuation. That is not showing me that the auction is favoring the uptrend, right? When I see these uptrends, I want to see aggression into new highs, right? And so ASTS is doing just that, and we gap down. That was immediately countered with a gap up and weekly displacement. So what I would like to see is maybe it cools off, or you maybe go for a higher low on the lower time frames. But pretty much what I want to see from here is this just starts to trade out, and hopefully we can get like I'm looking like at 50, 54 within the short time frame. But development of this looks really good, and due to the weekly and the 2 week, it does favor, right? You're also inside 2 week with 6 days to go, so this higher time frame candle can still develop further. So that's kind of what I'm looking to see can happen. We have a really good reference point as well. We're trying to now create an inversion here. So this would be the first one. You have one more to go through. So there is still some hurdles. As you can see, you are starting to exhaust within those hurdles. But if we can get pushes through the 47, I do anticipate a nice clean move into 53 and 55. Definitely keep this on watch. Another one, this one's a really quick chart. It's just a firm buildup. Again, I really like the overall structure. Higher low was established, and when I talk about delivery, you could see what I mean by that. Wick into it, nice breaker, countered with a gap up and displacement. Now you're kind of consolidating a little bit here, building a good little range. If you go for the LR, I would anticipate this, or just directly. But so far we got the reaction we wanted from the higher low. So can we continue the trend into those new highs? Super clean and fun chart. The next one is Microsoft, and I know what you're thinking. Oh, buddy, here we go again. But hear me out. Manipulation candle, look at the delivery afterwards. Structure changed on the 4 hour. And not only did it change, but we created a beautiful inversion gap off the bottom of the broadening. And now we're seeing really good structure change. So now you have this, right? And I would like to see follow through. Now, again, you are coming into a clean little SR flip here. So I would anticipate this area here to cause some trouble if you don't get any immediate breakthrough. But if Microsoft reclaims 522, this is going back to those monthly highs. So pretty much what you want to see now is, can we continue and hold the integrity of the development that's trying to occur here? Again, you got broadening low sweep countered by aggression to now establish a nice inversion on a higher time frame, and you did it with a gap up. You didn't just peek into it and chill out. You gapped through it. These sellers just got ran through by buyers off broadening lows, and I like this a lot because of where price is relative to like the tech market and all these other big names. So super pretty chart, and I actually want to say that I favor this one for a little bit more continuation. And again, if you do retrace, remember, don't get scared because now you have a established range low and a range high wherever that's going to be. So far, I don't know yet because from the daily development, this is all still part of your original impulse, right? So I don't know where to anchor this, but when you do start to get that retracement, if you don't get the immediate push through that 522, then you can anchor it and try to see if there's any confluences, which let's say you get to here and it doesn't break and then you retrace. This is all still a very, very viable dip to go higher, right? Looks super good. I like that this is trying to change on the 4, and you also have this, right? You got a little bit of that development change. So keep Microsoft on watch for a reclaim of this nice SR that could give you continuation back into previous month highs. Really pretty chart. I like it a lot. This is also one of my favorites. It's just a very slow mover. We are coming up into the 30-minute mark, so I'm going to try and keep this a little bit quicker. ACHR, aviation. Don't really need to say much. We did miss the initial OTE, but what I like about it is 816, 823. So we got a really nice weekly sweep. And then when I talk about the delivery, remember, it's always about, okay, if you're coming into discount, part of the confluences is how is price developing. So you got back-to-back weekly wicks followed by a really strong weekly gap. So now we have weekly displacement paired with a nice volume imbalance off of the higher low. And you can see that structure pretty cleanly here. And if this does work, I also want to say we have a nice set of highs at 1392 and 1373, right? They never got swept. Similar to how it developed over here. Kind of left the same format, broke down, and then aggressively reclaimed. So hopefully this is a start to that. And if not, we are looking for at least 1063. And then when we zoom into the 2-day, again, you can see that compression staircase with that 2B bottom, followed with a gap, SR flip on the 4, followed by higher time for displacement. So again, we're looking for at least 1064, 1080, 1160, 1240, and maybe even the high 13s. Really pretty chart as well. AMD I would keep an eye on due to the fact that you have exhaustive lows at a weekly inefficiency. 149.22 followed by a gap up or a gap down that immediately got recovered. 149.85. Now kind of developing pretty good. So this is your weekly inefficiency that is trying to support price. 123 has held now for 3 weeks. So if this is going to be where it's finally ready, maybe you get like some kind of deep, and you could still come in and sweep them because you do have a gap. But if you do come into the gap, I would anticipate 147, 148 to hold and be a really good risk reward buy to potentially trade this back out into previous week highs. So 164 would be my immediate target because you have relative equal highs there. And based off of this, if this is going to be your exhaustive low, I would like for that to hold and start pushing price higher. Another one that I'm looking at is ARRY. Due to the structure of this could develop for a little bit longer, but I am keeping a close eye if we do get a pushback into the mid 6s, low 7s, because then that would establish this breakout as your higher low trend continuation. And because order flow is still pointing up on this, this could be where we get a really nice discounted entry to potentially trade this back into the 10 plus. So hopefully you enjoyed that, and that concludes our watch list. And as always, I do these videos for you guys, and hopefully this is painting a new light in how you can see price action. And all I ask in return is for your support, right? Please subscribe. Let's try and get this account to 5,000 subs by the end of the year. I think that's a reasonable and realistic goal. Please, please, please leave a like, leave some comments, and share my page with all your friends and family. And as always, I'll see you guys next week. See ya.